We were all talking about how this past couple of weeks, market strategists came on saying the year-end rally could come to an end. There's just so much uncertainty that is creeping into this market, whether it's the Federal Reserve, the idea that big tech companies won't be able to hold on to their earnings growth. They've been able to deliver Wall Street over the past couple of quarters. But here we are at another record high. What do you think happened?
I think that the markets are really struggling with this question of the Fed, what it's going to do and how quickly it's going to do it, and the expectations that it could move its pacing up so that by March, April, and May we're expecting Fed hikes and tapering to be largely done. If that's the case, then valuation becomes a real issue. But the reality is that we're also seeing a lot of pent-up demand coming to the fore, and the holiday season is exactly when you tend to see that. And so I think that some of that is driving this sort of little bout of optimism that we're experiencing. Seema, look, we are slowing from very, very high pace of growth just because of all of that pent-up demand and unlocked demand. We're going to continue slowing, but the numbers will actually still remain positive. So I think that idea of slowing in the face of rising rates is really the question that the market has to grapple with.
When the market started to sell off, Gina, in early December, it was technology that sort of led us lower. Right now, we're looking at the Nasdaq just about 4% away from its recent 52-week high. Is technology, how are you sizing up the opportunities there? Obviously, an exciting place to invest, but when you break it down, hardware, software, cryptocurrencies, fintech, where would you be putting your money to work?
Look, I think that you still have to look at the long-term trends, and you have to invest for more than just the day or the month. And the long-term trends basically still argue for greater demand for cloud computing, greater demand to sort of move into the 21st century. And while coronavirus certainly got us there a lot more quickly than we expected, that's not going to stop. The challenge is the valuations. But even given some of these valuations, I think that you can still make a strong argument that parts of the tech story, like Microsoft, for example, or like NVIDIA, that those are well priced, highly priced in some cases, but still very strong stories that are not going away.
Lastly, Bitcoin back above 50,000. Would you be an investor, Gina?
So Bitcoin is a harder question because Bitcoin really, really relies on excess money supply, and that we think is going away. We think that this liquidity story, because of the inflation that has been created for a number of reasons during the coronavirus pandemic, that has actually given the Fed really no direction except to start raising rates and removing liquidity, and that's a bad sign for Bitcoin.